Choppy trade for the indices. Nifty hovers around the 21,100 mark. Sensex above 70,500. Broader markets outperform. And after starting a day in red, auto, metals and technology index reverse losses. Media index outperforms. Zee Entertainment off highs after jumping over 5% on possible deal extension. Now this comes after Sony said yes for the discussion. And shipping stocks, Mazagon Dock and Cochin Shipyard rally on order win from Ministry of Defence, and that is what fuels optimism. And a blockbuster debut for Inox India. The stock lists at a premium of around 44% on NSE. We will also be joined by Siddharth Jain, promoter and non-executive director of the company, later on the show. Let's head across to Agam to understand how markets are panning out. Agam, the kind of euphoria, the selling, the panic selling that we saw yesterday, does today's session tell you that there is some bit of a full stop to that?
Right, it does, Hiral. And you know, a lot of traders and investors are saying that is this about a short covering? We've not seen short covering yet. We have seen the indices come off from day's lows, yes, and we are in fact in the green, but only marginally so. And it does not necessarily mean short covering, because that would mean at least gaining some of the losses that we have seen in yesterday's day of trade. At best, this is a pause. Can we expect a consolidation? That is most likely. Are we expecting a little more weakness? Well, that's something that we're going to have to wait and watch. But short covering will come through after we have seen a little bit of a clawback from the kind of losses that we saw yesterday. That said, as far as markets are concerned, which are flat, at least coming to the benchmarks. And when it comes to your broader markets too, well, we're not looking at too much traction, but the broader markets have done very well at the moment, and we're starting to see a little bit of recovery as far as your small cap and your mid cap indices are concerned, which are in fact trending in the green as we speak. We have the media index, which is up and about. That's actually gaining a lot more in general, and of course among the top sectoral gainers too in today's day of trade. So we have the media index, something like an oil and gas, and that's largely on account of the gains that we've seen in Oil India yet again is also gaining some amount of traction, and it's the PSU banking index as well, which is gaining some momentum. We're going to talk about a handful of these themes in stocks as well as through the course of the show. But overall, if you consider how things are panning out for your broader markets, I'm going to very quickly take a look at your small caps and how they are doing. So on the gaining end, we do have Metropolis, which is up around 7.5%. All sorts of speculation in the market, and I'm not going to attribute that to any sort of concerns with respect to COVID right now. The only thing that we can observe is that we are seeing longs in Metropolis, nothing more than that. And of course, we have gains in Hindustan Copper, along with Chambal Fertilizers, Suzlon, and GMM Pfaudler. All of them are advancing around 3.5 to 4%. That's as far as your broader markets go and some of the key gainers in the broader markets, Hiral.
It's very interesting to see what the recovery looks like in the broader markets and the kind of stock-specific action that we are seeing. But let's look at the stocks that we will be focusing on in today's session. Cochin Shipyard, Mazagon Dock, Ami Organics, you have Hindalco, which is in focus from the metal pack. Purable Enterprises is in focus as well on the back of the exposure that they have to AIFs. Coal India, Bank of Baroda, as well as SBI. These are the stocks that we will be discussing with our guest as well. Devarsh Vakil, Deputy Head Retail Research at HDFC Securities, joins in. Devarsh, good afternoon and welcome to the show. And we will come back to you in terms of questions, but first, let's look at Mazagon Dock and Cochin Shipyard. Both of these companies have backed orders from the Defence Ministry. Firstly, we'll head across to Mahima to get us more in terms of what do these order wins mean and what does the order book of both of these companies looks like. Over to you, Mahima.
Right, Hiral. So, Mazagon Dock Shipbuilders, the company has signed a contract with the Ministry of Defence for 1,615 crores. The order is for construction of 6 next-generation offshore petrol vessels. This order is basically for the Indian Coast Guards. Now, recently, if you see, they had also bagged an order from a European client for $42 million, and they've also won a contract with ONGC for 1,145 crores. And their order book as of September 30th stands at 37,500 crores. also, their expected guidance for FY 22-23 stands at 12 to 15% increase in their top line overall. And if you see Mazagon Dock Shipbuilders have seen a massive increase in terms of their capital market valuation also, and this is because their share prices in the past 52 weeks have risen over 143%. So overall, Mazagon Shipyard Dock Shipbuilders, the stock trajectory is really nice. Next, we have Cochin Shipyard, where Cochin Shipyard, the company has again received an order from Ministry of Defence for 488 crores, and this is for repair and maintenance of naval vessels. So this project needs to be completed by 2025, and Cochin Shipyard's order book as of 30th September stands at 22,000 crores. And if we talk about the stock performance, the stock has grown over 105% for the past 1 year. So these are the two stocks that have received orders from the Ministry of Defence.
Thank you, Mahima, for getting us the details. Devash, both of these stocks have been multi-baggers, more than doubled on a YTD basis, or even if you have to see in terms of, a 1 year perspective. What would your view be, and what would you advise investors to do? So
both these companies are at the juncture where we have been usually bullish on the PSU stocks, and especially in PSU we were bullish on the defense and the back of government's initiatives like Make in India and Atmanirbhar Bharat. A lot of offset orders were given to these companies, and they have been able to garner a lot of India's defense expenditure market share. As your associate mentioned, these stocks have gone through one of the best re-ratings in recent past, and the valuations have become quite stretched. Our view is that we have been bullish on it. Our yearly targets have been long achieved from June to December, and now I think these stocks have already discounted most of the positives. We expect them to have some kind of a time correction here. Let's earning reflect the kind of prices which are there on the screen. So maybe we'll wait for another couple of quarters for earning to come in, and after that review and again maybe turn positive on it. Those people who have actually invested in it, I would advise that gradually they should look to deploy this money at opportunities which are better opportunities which are available right now.
Okay, well, so positive, but on the whole, we have seen them mature to the kind of levels that Devash is expecting to. So we're certainly not looking to add new funds into both these companies. But that said, the outlook is still positive as far as these companies go. We'll move on, shift focus to AMI Organics, and we've seen a big bulk trade there as well. And let's get in Varsha to give us more details. Varsha.
Good afternoon, Agam. So if you see, AMI Organics was down 4% in intraday today, and it's down almost 2% today. Now, this is on the back of 12% equity change hands in large trade. Now, buyers and sellers are actually not known immediately, but if you see the shareholding pattern as on September 2023, we have Plutus Wealth Management, which holds almost 8% of equity. Then Malabar India holds almost 2% of equity. Then you have Ashish Kacholia, who is called as big whale of Indian stock market, holds almost 2%. Now, if you see the recent updates of the company, they've entered into agreement with Fermion. So significant uptick in revenue is expected in FY25 through this deal. Also, Q2 FY24 was not good for company as exports didn't pick up much, but they're expecting good growth sequentially and also in FY25. Now, the growth levers for this growth would be Fermion contract, then their entry into electrolyte business and semiconductor industry.
Okay, Varsha, thanks for joining us and giving us those updates on AMI Organics. Devash, if you can come in on this one, I believe at least your institutional research team certainly has coverage on AMI Organics, and it's come off from the levels of 1,350, currently at around 1,100. What's your view here?
Right, so we do have a coverage and we are actually positive on the company. AMI Organics is the first Indian and a global company outside China to successfully develop this core electrolyte additive for sales business. This basically, these chemicals are used for the energy storage devices, and we know that the future of energy is moving towards these storage devices. So many companies in US and Europe are actually trying to de-risk their supply chains and shift it away from Chinese manufacturer. And that's where we think there is a tailwind for AMI Organics to help scale up its electrolyte additive business. Apart from that, they have recently done a acquisition. They have recently purchased the Baba Fine Chemicals. These companies may help this AMI Organics achieve another 25% kind of a top line, because this BFC produces chemicals that go into making the photo acid generators and which are used in these photoresistance chemicals. So both these sectors where we see a lot of government initiative and the future of technology moving, and that's where the semiconductor side and the energy storage side, this company has business. So we feel that these both will help a company generate superior earnings growth, and we are positive on it. There was an overhang on the stock. One of the earlier promoters, which have been now categorized as a public holding, they were looking to sell. Today's bull deal may come out that one of the families which have earlier looking to sell may have come out of the company, and that's would have removed the overhang on the stock. And I feel once the supply is gone, stock can move up. So we have a coverage on it and a target of 1360. So clear about 20-25% upside we see on this stock from here. So we are positive on this company.
Right, fair enough. So clear upside. Devash, stay with us. We'll slip into a short break, but on the other side, we talk about stocks and a lot more. Stay tuned in.
Welcome back. You're watching Hot Money. Metals index is in focus. It was one of the top losing sectors in yesterday's session. But now you have brokerage firm Jefferies, who's cautiously optimistic on the metals and mining industry. They do prefer a Coal India over other stocks. My colleague Himansh Kanwal joins in to give us the details. Himansh, what are you picking up from the report?
Hey, so Jefferies is cautiously optimistic, to put it broadly, and this comes in because of the Chinese factor that comes into play. Chinese recovery is a crucial element to watch out for next year, and well, Jefferies has upped the target prices for all the 4 counters that are in focus: Coal India, Tata Steel, Hindalco, as well as JSW Steel. Now, what really augurs well for Coal India is the fact that they have an improving volume trajectory that has been seen over the past 12 months. The stock has also performed in line with that, running up about 55% year to date. The macros are also looking good as we head into the election year. Capex and infrastructure and increasing investment seems to be the talk, and they are expected to improve here further. Power consumption as well is a key positive for Coal India moving further. Steel prices, as for the steelmaker, steel prices are expected to cool off and track global prices as well. Cool off in the sense that you have the rise in raw materials, coking coal as well as iron ore prices that have run up. They are expected to tread softer as the Fed cut rates also have an impact in the next year.
Right, so that's what Jefferies is saying. Devash, how are you looking at a Coal India? And specifically, apart from that, if you have to look at JSW Steel, Tata Steel, Hindalco, do you think this is still an industry that you would want to watch out for, and these are good levels to invest?
So, as our colleague pointed out, People's Bank of China is trying to implement some structural tax cuts. They are trying to offer some fee cuts, and also, so the government from fiscal side and from the monetary side, the Central Bank of China, all these are trying to revive and help the Chinese slow down to move away from there and try to increase the funding available to the lenders, to the real estate players. They are trying to make available more credit to the NBFC segment there. But these things are likely to take time. So the metal companies who are exposed to the global factors may not be able to recover their earnings so fast. What we prefer right now is the companies who has a business and they are producing in India for the Indian companies, because where we see clearly good amount of infrastructure growth coming in, the domestic demand is great. So the companies, like you mentioned, the domestic steel producer, the PSU steel producer, or the PSU iron ore manufacturer, all these companies are looking attractive to us, but companies like Tata Steel, which are exposed to the global business, or Hindalco, we are a little cautious now.
Okay, the caution as far as metal sector is concerned, we shift focus to Piramal Enterprises. Now, we know that, very recently we spoke about how the RBI is cracking down on evergreening of loans, and on account of that, we have a handful of AIFs which are in focus, and of course, NBFCs won't be spared either. At the moment, what we understand is that Piramal Enterprises will also set aside provisions worth 3,164 odd crores since their investments are also into AIFs, even as we see the RBI tightening norms with respect to evergreening of loans. Piramal Enterprises at the moment is down less than 1%, but in the morning we did see a sharp knock. It has recovered from day's lows. At one point in time, it was trading lower by as much as 3%. But that's as far as Piramal Enterprises is concerned, and actually, it really is not comparable to the rest of the NBFC space, because Piramal has its own set of challenges. That said, Devash, if I could take your view on the entire sector, on the entire NBFC sector, if you have any calls here or just your general view here.
Right. So the recent shares of NBFCs dropped because of the reaction to the RBI's rules of barring the lenders from investing in any scheme of AIF which has investment into the debtor company. So according to RBI, these NBFCs and bank investing in any schemes in AIF has downstream investment either directly or indirectly in the debtor company must liquidate them in next 30 days or make a 100% provision. So what will have, this will have an impact on the NBFCs like you mentioned or any fintech space in the form of a slowdown to the ultimate moderate consumer credit growth, and this will also increase the cost of funding to this sector, and that's why we remain a little cautious on them. We prefer the housing finance as a sector in NBFCs. I think there is a healthy credit growth going on, and there is opportunity to safely invest and earn returns. Recently, our institutional team has come out with a report on Canfin Homes. Canfin Homes have been one of the historically one of the most durable franchises delivering the high quality AUM growth. There was a recent incidence of fraud at the branches, but we think it is an outlier event, and these recent investments they have done in the sourcing channel will augment its customer funnel. So there we have a target of 908. So if we were to invest in NBFC, I think our viewers can look at stocks like Canfin Home for a longer term.
Right, so Canfin Homes one to look out for. Devash, when you talk about the PSU banks, how are you looking at them? Because clearly if you go to see, they've gone ahead and raised capital from the market. They've increased and improved their capital levels as well. And this was easily actually enable a healthy balance sheet growth for PSUs. Once the capex cycle starts, the recovery after general elections. How are you looking at the PSU bank index as well as the PSU banks? And do you think the sector is in for a re-rating?
So sector is in the midst of re-rating. One of the best growth we have seen in the retail side, MSME side, and the healthy credit growth is likely to continue. In fact, apart from the credit growth, we are seeing the improvement in the asset quality. The only challenge was that there was a slight bit of NIM compression on the back of a rising funding cost. But I think the liability franchise these PSU banks have, they are relatively superiorly placed compared to the private sector to grow their CASA. So valuations are much cheaper compared to and attractive compared to the private sector side. So we feel that investors can continue to remain invested in PSU banks. For example, like one of the largest and one of the best PSU banks, SBI, we feel there is a upside of about 20% from here, apart from whatever they have reason till now. So still clear long-term upside is available in large banks like SBI. So if somebody were to look at PSU bank, I think there is money to be made there. At every decline, we will be buyers in these PSU banks.
Okay, on that note, I'm going to take a moment to thank you, Devash, for joining us and taking us through your views on the markets. It's time to slip into another short break, but don't go anywhere. On the other side, lots more to talk about. Stay tuned. Welcome back. Well, time for some market opinion now. And we have Saurabh Mukherjee of Marcellus Investments, who told us that while large caps may not see a significant sell-off, small cap valuations are likely to see a correction over the next 12 months. Listen in.
If you take a 12-month view, it's difficult to see why large caps will sell off this point in. If anything, foreign investor flows are highly likely to come in over the next 12 months and lift large caps up, especially the sort of large caps that you and I have discussed over several years. The converse, I think, applies to small caps. I've been talking about several years about how the economy is consolidating. Town after town, city after city that I visit, I'm seeing the same story. Well-run large companies grabbing huge chunks of the economy, consolidating the economy. So small cap companies' profitability has been under pressure for decades now. It's a structural move. As you integrate a country, larger companies become more powerful, they pull away market share. And in that context, where the fundamental support for small caps is not there, I think small cap valuations correcting over a 12-month period are highly likely.
All right, and with that, it's a wrap on Hot Money. Lots more lined up on NDTV Profit. Stay tuned, and we will keep bringing you more.
Thanks for tuning in to the Portfolio Manager. I have a very special guest with me, and the reason I call him special is, well, not just for the kind of performance that he and his team have put out over the last 1, 2, 3, 5 years, but we know that portfolio managers and everybody likes making money, managing more money, and here we have somebody who, by his own admission yesterday on social media, has stopped accepting money from clients for further investments. Talking about Siddharth Bhaiya of Equitas Investments joins us right now on the show.
Hi.
Siddharth,
Hi.
Great having you. Thanks for joining.
Good morning, Neeraj. A pleasure to be on the show.
Thank you. No, the pleasure is entirely ours, and I'm sure the next 25 minutes will justify that. But it's an interesting decision for a money manager to say that, hey, I'm stopping all investments.